Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get cut. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, we've got quite the day ahead of us here. We got a Federal Reserve meeting, and the markets have been going wild overnight as Putin, said mean things again. He said more than mean things. He threatened nuclear war. Okay, so I don't want to trivialize it, but I don't really know if this really justifies any changes in the markets, but they are reacting to it, and it's going to provide us some opportunities, I think, to find some trades in here. So let's come to the charts and see what the damage is, huh? I know that crazy things have been going on. Well, the treasuries did move back up, but not that badly. I mean, yesterday's move wasn't that extreme either, and there was quite a bit of bounce back afterwards yesterday as well. So us a little bit higher, not a huge deal. You can see equity markets actually not reacting to it too much. But when we come over and we get into oil, big spike up. Natural gas, big spike up. Gold and silver spiking up. Silver especially spiking up. Copper struggling a little bit. And then when we get over, well, Bitcoin is still kind of middle of the road here. And the dollar above 110. Oh, man. The dollar. Don't you just wish that you had just gone all cash? Come on. This thing is just crazy. Well, today we don't have any 6:30 news, but we do at 8 o'clock have U.S. existing home sales, as well as it's Wednesday, so we're going to get crude oil inventories at 10:30. I would anticipate that we should see a little bit of maybe some rising interest rates today, although it may be limited. Here's the thing, the volume of the past 2 days, I mean, we've had some decent moves, but it has been a little bit iffy, It's like some of the movement, it doesn't really continue. It's like you get a good move and then like that's it. It's over. Done. So I'm expecting that volatility will probably be somewhat constrained pre-FOMC still. They are interest rates are rising here. I mean, we're at 3.53. So I don't know if a long in rates is justified here or not, but I think that I am just going to keep my powder dry. Markets did react negatively to the Putin stuff. But when I look at the actual charts, it doesn't look terrible. There wasn't too much damage done, and it kind of looks like it's coming back. So let's come in here and see what Cassandra, Mr. Michael J. Berry is defending cereal because he cannot stand a false narrative. What are mortgages at right now? I think they're like above 5%, yeah. I don't really have good ways of looking at, market data on mortgage rates, unfortunately. Ari, new name, welcome. Listen, if all you're eating is cereal for breakfast, fix that. Cereal is only part of a complete breakfast. just like order flow is only part of a complete trading strategy. Do I? No, I do not. Okay, so do you subscribe to the Austrian School of Economics? The Austrian School of Economics has some interesting ideas, but the reality with the Austrian School of Economics is that it has basically become a online reactionary movement to counter, you know, stimulus style, you know, spending. So the Austrian School of Economics people, I'm not seeing them put out serious research. I'm not seeing them make serious economic arguments. Is just I hate the Federal Reserve and the Keynesians are wrong. So I don't really, I mean, I've because I've looked into it quite a bit. There's like there's a bunch of people, like I think there's a subreddit and there's a Discord out there just specifically for Austrian economics. But so the whole thing is that like one of the premises for at least the online Austrian economics people is that the research isn't actually useful because it's economics and it's too complicated. And that's that's wrong. Like the crazy thing is that our understanding, we are in the middle of a huge renaissance in economic understanding, and the we're just on the precipice of some of the biggest discoveries as we get into agent based machine learning systems. I think that our economic understanding is going to increase even further. Okay, so we understand the economics really, really well, and there are people in serious policy positions, like at the Federal Reserve, that have a very good idea of what they are doing. Okay, but the problem is that our ability to actually act on and implement that stuff effectively is very limited right now, right? And so uh, that's where we have the problems. And I don't think that the solution is to throw away everything that we know and say, "Oh, it's no good. The research mustn't be no good." No, it's real research with real data backing it up, right? Okay, is there any free order flow indicator available? Well, I'm trying to think of which ones I've included in my free package that are order flow related, but I don't think that I do. I'll tell you what, if you want to trade order flow, I don't think that there's a better way to do it than the DOM. And the best DOM is Jigsaw, and it's not free. But like I said at the beginning, order flow is only part of a complete breakfast. So if you really don't want to spend money, okay, there are like free cumulative delta indicators out there. Slap a cumulative delta on a chart, and I would probably do something. So like if you go into NinjaTrader and you create a chart that is a one range chart, and then you put the buy sell indicator on there, right? That will show you how many orders went through at those prices before price changed, and would show you pretty similar information to what you see on the DOM. And that's how I would try and do it if I was really insisted on not spending any money. But I think the reality is that if you really want to get into trading, you probably want to put, you know, a few $100 into some software and stuff to get started. I would probably pay for a news squawk. That's like $100 a month now, I think. News squawk. A Jigsaw is it a lifetime license or do you have to pay? So for Jigsaw, it's a roughly, I think it's $5.50 to start. Sorry, I haven't looked at it in a while. I have a coupon in the video description that'll give you $100 off. So I think that it ends up being $4.50 after the coupon. But if you want to actually enter orders on the DOM, like I do, clicking here and all that sort of stuff, which I think is one of the really big advantages of using the DOM, then you have to pay $50 a month. Okay, but you don't have to do that. You can just use this for information and enter your orders in a free trading system. You're an MQL5 code. I think that oh, that's MetaTrader, right? Yeah. I wouldn't use MetaTrader. I think there's much better platforms so you can trade futures, frankly. Let's get the free version of NinjaTrader and start programming stuff in C#. You can make whatever you want. Works great. I don't know. In trading futures, they is getting so much better. When I started, it was like you had to probably put down $1,000 just to start, and that's not even like what you'd put in your account, right? But now there's so many options. Like the Iron Beams platform. If you don't want to spend money, Iron Beam has a really solid platform. It really does. Oh, can you program in Python? No. I do not know. So this is if I when so here's why you should support the channel and buy the indicator package and all of these things is because that money is going to go towards I think someday making a better trading application. And if I made my own trading application, I would have the programming done in Python. I have one you can do Python for scripting, or if you want to go more serious, you'll be able to use Rust. That's what my platform would be. Okay, so we've kind of been going back and forth here at 0102 for a little bit. It does still look tilted to the downside, but the volume is very iffy. S&P 500 took a pretty good move up though. So, all right. I love it when we have good questions right at the very beginning. Yeah. I guess I should mention though, because if you haven't checked out my NinjaTrader packages, you can download it at speculatorseth.com. You can use them for free for 2 weeks. There have a lot of stuff that kind of helps you with correlated assets spreads. So I have a spread chart that's gotten quite feature rich. I have a dollar index that I think that's really important for you to be able to see. I also have a couple of other little things that you're not going to find anywhere else that I just kind of made along the way. I'm not going to say that they're like game-changing tools or anything, but like I have a Kalman filter. No, that's not anywhere else. Yeah, it's little things like that. So let's get onto Twitter here and see what we got overnight. If I missed anything big, what's a Kalman filter? So a Kalman filter was designed for tracking aircraft via radar. So like you're using a radar, right? And you're trying to track an aircraft. You don't 100% know where the aircraft was. And the reading that you get from the radar has noise in it, right? So there's noise on this end and there's noise on this end. How do you determine where the plane actually is? Because even with all of that noise, the noise averages out and you should be able to get a pretty good idea of where the airplane is, right? And so they use a noise filtering method called a Kalman filter. So if you apply a Kalman filter to price, it just does okay as a filter. Like a you could use a Kalman filter in the same way that you use a simple moving average, right? But price moving on its own doesn't do much for you. But if you start getting into more serious models, we say you want to do a more serious model in the market, having a Kalman filter can be really useful. So, but we made it to backtest something that a claim that somebody was making that was wrong. So I wrote that up for that. Um, and but I found it useful in other ways. So it was there. I stuck it in the indicator package. Can you explain how currency correlation works? Sure. So as it pertains to us in interest rates, the key thing that you want to keep in mind is that having higher interest rates generally attracts money to your currency. So right now, the United States has the best interest rates. That's basically the gist of it. And so the dollar is being really strong because we raise interest rates faster than other countries, right? So generally speaking, if I see the dollar moving up, I would expect to see the treasuries moving up as well. Okay. Conversely, the 6J is also extremely correlated to treasuries because the strongest buyers of treasuries come from the Japanese yen, and a very, very, very large portion of the money moving between the dollar and the yen is doing so because they're trying to invest in the United States to get the yields here, because there's basically no yield in Japan. Okay, so like pension funds, for instance, they're going to come over here and buy our treasuries, right? So when the 6J is moving down, you will tend to see the treasuries move down, and vice versa, right? 6J will move down. Well, okay, so this is a slightly different correlation though, right? Because if the 6J is moving down, we'd expect the dollar to be going up. So we would expect treasuries to be going up, right? But in this case, when it's coming from Japan, it's because they're attracted because the interest rates are getting higher, right? Sorry, did I get all those? Did I get all those mixed up? Have you heard the dollar milkshake? I probably have, but I'm not sure what you're talking about there. That sounds like something familiar, and you're going to say it, and then I'm going to be like, oh, yeah, I've heard that. But no. Let me get back to the currency correlation. So when you see the dollar moving up, you will tend to see treasuries moving up. Okay. But when the treasuries are going down and interest rates are rising, okay, you will often see that the 6J is going down and the dollar is moving up too. Okay. So there are currency correlations, right? You have to know what the thing that is going on is and which way the correlation will be going. Okay. That's kind of the point to this. So you need to be able to see the correlations, but you also need to have the background. You have to have the context, right? Know the fundamentals that are driving those changes, right? And then as it pertains to the treasuries and order flow, the thing that you're going to see in the order flow is that it will tick down, price will move on very little volume, if any volume at all. And that is because the robots are adjusting their bids and asks based on correlated assets, right? So the gist of it is that you really want to watch the correlations with currencies so that you don't get caught over here with your order flow, because what you're going to see is you're going to be like, well, they moved to the downside and they just didn't go for it. Like they were selling into it and they just couldn't do it. And then they backed up and then they went into it. It seems, and you're looking for the breakout and it doesn't happen. You're like, oh man, okay, it doesn't happen. So I guess I should go long there. And then all of a sudden it drops out, and it's not like a stop run or anything like that. It just ticks down on its own for no reason. And you're like, what the hell? Why is it as soon as I get into a trade, then it ticks down? right? Whereas before, the order flow was pushing against it really, really hard. Why isn't the order flow paying attention to it now? Well, the answer is it moved down because of the currency correlation, right? So does that help explain why seeing the currency correlation is important? Now, I just gave you two examples of a correlation where they're kind of opposites, right? When the Japanese yen is going down, you'll tend to see treasuries moving down and the dollar moving up. But there are other times where the dollar moves up and you see the treasuries move up. Oh, I know where I confused myself earlier. So generally when you see the dollar move up, you're going to see the treasuries move down. Okay. But when there is a flight to safety trade, right? When there's a flight to safety trade, what you're going to see is the dollar moves up and the treasuries move up. That's what I got wrong. There you go. So because I'm running through a scenario in my head that like I've thought about in my head before, and I just kind of forgot what I was saying. Can you have no Tobias, I know exactly what you want to do, and it is the biggest annoyance in NinjaTrader is you want an indicator that makes two panels in NinjaTrader. Yeah, you can't do it. Isn't that stupid? Oh, it's so annoying. But basically what I do is I will make an indicator that has multiple data series on it, and then you just add the indicator multiple times and show and hide which one you want. So if you download my indicator package, you'll notice if you go in there, like especially with the like the inventory cost basis, for instance, there's like 5 data series in there that are kind of used to calculate the things that the indicator does draw, that I'm not showing. And if you want, you can add the indicator twice to show like the inventories. Essentially, that's how you get around that. So let me try doing this again for Hari's benefit, because what I said there might be a little bit confusing. Okay. One of the correlations that you will see is that the 6J will move down. Okay. Now I'm talking 6J. That's like the CME FX instrument. If you're looking at JPY/USD, it's the opposite. Okay. That's the inverse of that. But if we're looking at 6J, 6J is going down. You will tend to see treasuries going down, which means interest rates are rising, right? And the dollar moving up. Okay. But if you're seeing a flight to safety trade, what you will tend to see is the treasuries are moving up, the dollar is moving up. Okay. So that's an opposite correlation, because typically it's that the dollar, right? The dollar moves up and the treasuries move down and interest rates go up. But I'm saying that there's a situation where the dollar will go up and the treasuries will go up and interest rates will go down because it's a flight to safety, right? So you have to know what is driving the flow, right? And the reason why I come in, if you come over and look at this chart over here, I have like a bunch of charts, and I even have a bunch of like little ones up here in the corner. Why do I have so many charts up and like this market analyzer and stuff? Because I want to keep track of what's going up and what's going down today. Basically, I'm trying to sort out in my head from a macroeconomic standpoint, where is the money coming from and going to, right? Because, I mean, well, the governments do make money out of thin air, right? But they don't just make the money and then it's just there. It gets invested into things. And so we want to know, where is the money getting invested into? So right now in this market, okay, because the S&P 500 is down big time, right? S&P 500 is down big time. Where did all that money go? Right? Because people sold their stocks. Where did all that money go? Well, normally when you're getting a flight to safety trade, you see the treasuries move up, right? Normally, you see the treasuries moving. You say they're taking money out of equities and they're putting it into treasuries. Very, very simple flow. But that's not what you've been seeing lately. You see the S&P 500 will go down and the treasuries will go down. Why? Because the reason that the S&P 500 is struggling is because interest rates are rising. Because the trigger is coming from the treasuries. So if the money is coming out of the treasuries and the money is coming out of the equities, where is it going? And the answer is the dollar. And that's why the dollar is up over 110. Right? All of the money is going into cash, which is, I've never seen it quite like that, where it just only goes into the dollar. I don't think that's particularly a good thing for the markets in the long run, but that's what's been happening, right? And you have to understand that. You have to, and sometimes you'll see a correlation that you don't understand, and that's where you're going to want to do extra reading that night. Read a lot of news, figure out what are some theories as to why it's moving where it's moving, right? So that's correlations, okay? So when we're talking about a complete trading strategy, there's really 5 things, okay, that I would consider for a complete trading strategy. One is risk management. I think that one just kind of goes without saying, right? Reality, what you need to do as a retail trader, as a speculator, in terms of risk management, isn't all that simple. Just know what your risk is and stick to it, okay? And don't take a huge loss on a day when you don't need to, okay? Number 2 is you want to have predictors of order flow. So that's going to be something like a model that shows CTA positioning and how CTA positioning changes as the price of the treasury instruments change, whatever it is, right? Okay. So I'm not going to explain how a CTA works, but you'd want to go and read about CTAs and see what kind of strategies CTAs work, how that works. Okay. How do 60-40 risk parity funds behave, right? That can be a predictor of order flow. How do funds rebalance at the end of the month? That could be a predictor of order flow. What is the seasonality in that instrument at that time of year? That could be a predictor of order flow, right? Number 2 is news, breaking news. Breaking news is really another predictor of order flow, but I think it's such an important predictor of order flow that we should call it out specifically, okay? You want to look at breaking news and breaking economic reports, okay? So that's your number 3 thing, okay? Number 4 is currency correlations. So part of that is that the currency correlations and correlated instruments, and really I'm looking at like every instrument on the CME. Not every instrument, but like one from every section. I'm looking at something in energy, I'm looking at something in metals, right? Because I want to know where the money is coming from and where the money is coming to. That will help me understand the predictors of order flow, right? But it will also help me understand the order flow itself. It'll help me understand why did it just slip through there when it wasn't before, or why we might be seeing the order flow that we are. Where is that money coming from and why is it coming from? And I can make theories about why that is. And then as things progress, I can, say, oh, well, this theory can't be true now because this is happening, or vice versa, right? So did I get them all? Get them all. Yep. Order flow, currency correlations, predictors of order flow, breaking news, risk management. Those are 5 key things of a trading strategy that I think you want to have if you're gonna do this seriously. Okay, so Trading Bunny asks, is there a delay from when money enters the market and when positions are entered? Sometimes. You know what? When typically what you're going to see is big bad thing happens. So like last night was a really good example. Okay? Because what happened last night? Putin came in and he did a partial mobilization of Russia, which in this case means that they're calling up reservists and people that formerly served in the militaries. I don't know if it's like a huge deal. I don't know if it's a huge deal, but you did see the markets react. Okay. So markets are reacting flight to safety because of the global political volatility, right? How did things move? Equities moved down, oil moved up, metals moved up. Now, this one's interesting because people have been saying gold is a hedge against inflation. It hasn't really been acting that way. But is gold an effective hedge against global political instability? Yes. Yes, that seems like that's the real trade in gold. So when there's war happening, then you want to buy gold. Okay. Copper reacted negatively. Okay. So all of those things moved at the same time. Why is that? Because the people in that trade those individual instruments know how that particular event should affect their instrument. Okay? So a lot of the time it kind of happens all at once. And in a move like that, well, I think in this instance, probably what Putin said isn't too important, right? I'm sitting here going, well, like he's going to call up a bunch of old people. Does that really change the war in Ukraine? No. And if he threw a nuclear missile, that'd be different. Okay, like if they threw him, so now we know what the trade is, right? If Putin uses a nuclear weapon, we buy gold and we let it run. That's what we do, right? In this case, it was like, oh, there's the move, but then it didn't really matter, so it came back, right? So the reason that the instrument moves is because the traders there are predicting order flow. They're saying, people are going to come into gold and silver to hedge themselves about the against the political instability, right? So the speculators and the market makers, they're making the market move from that. Okay. So if it's like a big public event, then yeah, that's what you'll see. But sometimes they're quiet moves, right? Sometimes a fund comes in and they say, I'm really negative on the S&P 500. And they've done all of their research and they look at the economics and they know really good chance S&P 500 is going to do poorly. So I want to sell equities and buy treasuries, right? And they'll do it slow because there wasn't some big piece of news. Not everybody knows that this is going on, so they're slow about it. And actually, what they tend to do is buy the treasuries first. So there are many times you will see, it's many times. I mean, it's this is something that you maybe see a few times a year, but you'll see it. You'll get this trend up in the treasuries. Seems like it comes out of nowhere. You're like, what's going on? And then they turn around, and as soon as the S&P 500 opens, they sell it, and they sell it hard, right? And that's, oh man, if you can catch that one in the treasuries, that's the best. That's the best trade you can catch in the treasuries is when you catch the beginning of a flight to safety to treasuries before the equity markets realize what's happening. Okay. So I guess the answer to that question would be it depends on why the money is moving. Right. But isn't that kind of paint an interesting picture for order flow that you maybe people don't typically consider? Is that I can kind of predict what kind of order flow I'm going to see based on why the money is moving. If the money is moving because some big crazy unknown event happened and it's a flight to safety in the treasuries, this thing is going to move up and it's going to be like crazy stop runs the whole way, right? Whereas if they're doing a sly trade, like it's flight to safety, but it's based on like their economic analysis and stuff, they're gonna be slow about it. They're gonna use limit orders. They're gonna absorb stuff on the bid, right? So if I come in and I say, yeah, today they're probably gonna sell the market, they're probably gonna buy the treasuries up, right? But because I know how it's going and it wasn't based off of some trigger, I'm going to be expecting them to be sly about it. So I'm going to come and look at cumulative delta. Yeah, I'm going to see cumulative delta probably going up, but I'm also going to see like big icebergs over here, right? Now, right now, what are the current market conditions? Well, interest rates are rising, which is kind of the direction we're expecting, but it's pretty slow. And the amount of volume that we're getting through to tick it down, not very much. So that kind of suggests to me that maybe there is some fundamental flows selling and seeing interest rates rise to hedge themselves in anticipation of the Federal Reserve meeting, but that overall people aren't really all too anxious to do anything before the Federal Reserve. They probably think that everything's priced in. And the moves that we are getting, not too correlated to currencies. So I don't think that we're getting too much from currency flows right now. It looks like the treasuries are just kind of selling on their own. I wonder how market orders control their inventory when these flight to safety occurs, or do they have enough to handle large volatile moves? You're getting in now. You're understanding. I like the question because it shows that you understand what we're talking about. So for those of you that are maybe haven't been listening all week, I want to put some context on Trading Bunny's question, right? We generally think of the market as composed of three major players. That move below 114 now is looking pretty good. I'm not going to jump on it, but that looks good. Levi, welcome to Willie. Oh, thank you so much. I really appreciate it, you guys that do the subscriptions on YouTube. I have the $1 subscription so you can post stickers. So I'm totally. Anyways, so the market is generally three major players. There are the market makers, there are the informed traders, and there are the noise traders. Okay. So the market maker does not want to trade against the informed trader. The informed trader knows where it's going to go. For instance, maybe the noise trader knows that there was a nuclear attack. I'm not saying that a nuclear attack happened here, to be very clear. Note that news has not come across the wire. I'm just saying in the theoretical scenario that a nuclear attack happens and people are buying treasuries, okay? How does the market maker handle that, right? Well, the market maker these days is mostly a robot. And he does not necessarily know that a nuclear attack happened. I mean, I suppose you could build that into the model, but that's like kind of a really difficult thing to do, right? Because how is the market going to move in a situation like that? Kind of a little crazy, okay? But what the market maker does know is they know how much volume has come in, right? So they will adjust their bid and offer based on the volume that's coming in, right? So a really good market making strategy has like a couple of different components. It's actually something really complicated to write, right? One component is going to be correlated instruments, and they're going to move their bids and offers based on the correlated instruments to put limit orders at prices that are most favorable to them based on the correlations. Okay. For instance, here in the micro yields, well, the most correlated thing that you could look at would be the yields in the cash treasuries, right? And that's the reason why the spread is so wide is there's going to be the yield on the cash treasuries plus a basis difference to account for how long until the contract expires. So they have a spread because of that. Okay. Then the other part is what volume is coming in. So if I'm getting a really strong market orders coming in all to one side, they're going to pull their orders, right? So that's why it's really important to see stuff like I'm seeing volume come in. Like, look, 2,000 at 30 half, and then look, hardly anything traded at 30. The market maker basically said, oh, this is a really strong flow. I don't want to get in front of it. And they pull their orders, right? They pull their orders until the market orders have come through and the market orders have basically reached the limit of their impact. Then the market makers will come back in, and the market makers are basically trying to make money on this little pullback area that they're going to have, right? Now, if it's a really, really bad move, and the market maker is the wrong way. Like, say the market maker is very, very short the treasuries here, and then that news of that theoretical news of a nuclear attack comes in, and so people are buying crazy against it. That market maker will be like, well, I'm screwed. I'm just going to puke everything, right? So that's why sometimes you'll see these moves that are just like really. In fact, sometimes you'll see it in the S&P 500. So I have this model here that kind of tries to estimate what the average market maker positions are. So like this blue line is like the average buy, and this orange line is the average sell, right? And then this dotted blue line and dotted orange line are kind of like break even points. This is the point at which, if you're a buyer, you'll make a little bit of money because you buy it here and then you'll sell as it moves up. You're a market maker. You're trying to make money off of every tick or whatever. Make money off of the spread. Well, so you're gonna have some profits built in. So this is the line is like how far it has to go before it's eating into their profits, right? So you will very, very often see it's like it's moving up, and then all of a sudden there's a down move. It'll go right to this orange line because the market maker pukes all of their orders, and then there's like a recovery. You'll see that all the time in the treasuries. Fortunately, it's too difficult to know algorithmically when that's going to happen, but I see it happen all the time. So sometimes the market maker does just puke things. Okay. But then you are, Trading Bunny, also picking up on something really important to market making, which is that a good market maker has the ability to take on a lot of inventory. So this is something that's been going on in the metals markets, right? Is you have these people that basically act as market makers, but really what they do is they own the physical commodity, and they come into the futures and they sell it in the future. So they're hedged, but then there's a move against them. There's a move to the upside. And so they're selling it the whole way, and the amount of margin that they're taking up and using becomes more and more and more until it threatens the health of that market maker. And then they go to the regulators and say, "Oh, we need help," right? And then and so far, like in Europe, for instance, with the energy market makers, they pay up so that those guys don't have to puke, and that pushes energy prices even higher, right? So yes, I think that your take on it there is about right. Yeah. It is, isn't it? Like once you start to understand these sorts, like how the market works, it kind of answers some of the big mysteries that we often have about trading, is doesn't it? I think most retail traders just go from the perspective of, well, the market maker is going to do whatever screws people over the most, right? So that must mean that most people want to go this way, it's going to go this way, and vice versa. Mm, One thing that does happen is if I'm a market maker and I'm buying here, right? I want to make money on it going to the upside. So to some extent, I'm going to let it come up. I'm going to make it easier for it to come up. I'm going to pull my orders on the offer side, not put as many offers on the offer side, because I want it to come back up to make money off of it. So they do that, right? But the reality is that the market maker is just trying to make money off of the spread and avoid the informed trader, and make money off of the correlation that they have. So really the thing that's going to be most important to the market maker is like, what are the correlated assets doing? What is the volume that's coming into me, right? So from that perspective, the market maker really isn't as powerful as we give them credit for sometimes, right? Who's really the most powerful trader? Like who's the big dog that has the most power? It's the informed trader. You don't want to trade against the informed trader, guys. You want to know what's the informed trader know, what's he going to do, and trade with him, right? market making is really cool, but you're going to have a really inefficient instrument for a retail trader to make money off of it. But they do exist. You probably could make money market making in NASDAQ. You'd need a lot of risk, but you could probably do it. You need a lot of risk. You'd probably want a robot, but a retail trader probably could make that. What's this? S3 Partners retweeting a story from Bloomberg. Short sellers back off bearish bets after $59 billion loss. Neutralize and exploit concentration and herd risk. One trade can make or break your quarter. What will war in Ukraine, Euro, energy crisis, Fed policy, inflation, FedEx do to you? See how much exposure you have to the market's concentrated bets. That's positioning. That would be possible predictor of order flow, right? Well, I'm kind of sitting here looking at this. I think that the move below 114 was pretty good. I don't know if that's I think I'm still kind of leaning to I don't really want to take trades this morning. In fact, I don't even know if I'd take any trades at all today. Maybe some sim trades, during the FOMC. But probably going to wait until tomorrow, maybe even next week before I really try and make any big moves. But I am kind of still leaning to the downside. It's just I'm a little unsure how far they can actually go. The next kind of key benchmark below us would be 113.28 was a pivot from earlier in the day. That doesn't predict anything about whether we're going to stop or stop and reverse there or accelerate below that or anything. It's just kind of like the last place that we kind of want to keep an eye on. I was scrolling back here on Twitter and the Pit Chicago says the yield curve is all effed up. Oh yeah, it is. Well, the 10-year is still a lot lower than the rest of the curve. I think at some point the 10-year is going to have to come back, right? No, Brannigan. I don't. Okay. Brannigan Barrett says financial markets don't learn. Last week, heading into CPI, markets were complacent and bets were one-sided towards lower than expected inflation. Today, markets are only pricing in 10% chance of a 100 basis point hike from Powell and the FOMC today. I believe the probability is 50-50. He gives a more detailed explanation in his picture here. Market is underpricing the chance of 100 basis points. I don't think you can rule out 100 basis points. The reason is because they can counterbalance it with dovish rhetoric that peak rates come as soon as the December Fed hike can hike and be finished and pause. Just the notion of a pause coming as soon as Q4 will bring a lot of cash off the sidelines. That said, if they don't do 100 basis points, they will likely need to signal more hikes for 2023. Currently, only one 25 basis point hike is priced in for 2023 and then 50 basis point cuts at the end of 2023. Powell doesn't want to repeat of June easing that happened because it will make the job of tackling inflation significantly harder. Given the NASDAQ is only down 5% from the July meeting and rates markets are already pricing in a very hawkish rate path, from a volatility standpoint, Powell is better shocking markets today with 100 basis points and living with a few days of volatility. In return, he can restore calm and confidence to the markets quicker. So I think that there are two problems with this analysis, Mr. Barrett. Number one is that the Federal Reserve was very unhappy with how the markets reacted after their last FOMC, saying that they're going to pivot and that this is dovish and yada, yada, yada. And the financial conditions did ease. So they had a big problem with where the market was at that time. I think that where the market is right now, they're probably okay with it. And I don't think that they're sitting there like, oh man, we're only down 10%, or we're only down 20% from all-time highs. We need to be down 40% from all. I don't think that the Federal Reserve looks at it like that. Okay, they look at it as what are the financial conditions, and right now interest rates are higher than they've been in the last 14 years. So I think that they're probably okay with that one. Right. Number two is that the Federal Reserve, even though they've been raising interest rates, has been very, very careful to not totally shock markets. So remember that when we had that really bad news 3 months ago or whatever it was it the July meeting? I don't remember it now, but we had a CPI and it was really bad. And they were like, they're not going to do a 50 basis point hike anymore. They're going to do a 75 basis point hike, right? They put feelers out on the Monday. They put the stories out from their favored news outlets and so forth that they were going to do 75 basis points. So the fact that they haven't done any signaling on that, I think makes it extremely unlikely that they do 100 basis points. If they do 100 basis points, then that they did 100 basis points without signaling to anybody about it would be more important than anything else, right? If they say 100 basis points, you sell these treasuries like your life depended on it, right? Because that means that Federal Reserve still feels that financial conditions are too light and that they really have to absolutely shock and stun markets in order to get things under control. I don't think that that's the case right now. I don't see the case for that, but that's what that would say. Is it a good bet from a risk reward perspective? Probably, but that kind of suggests to me. So let's do a poll. Do a poll. Now that I'm kind of giving you all the stuff. Fed 75 BP, 100 BP. Do the poll. So we'll see. But I'm thinking that the possibility of 100 basis point hike is there's still too many people doing it, and that it may be the case that when it comes out and the hike is 75 basis points, that the markets will rise. Now, on the other hand, I think when the announcement comes, I don't think that it's going to be 75 or 100 basis points is the thing that everybody's going to be talking about. The thing that everybody's going to be talking about is the dot plot. Okay. So if right now markets are saying they will get to like 4.25, 4.5. Okay. So if there are people with dots above 4.5 on that dot plot, which I think is likely, then that will have, you know what? I got to comment on this. Fed is extremely unlikely to shock markets with 100 basis points and not do any signaling ahead of time as in the past. They can use the dot plot I think that you might see some aggressive stuff in the dot plot. And that's what I'm going to do. That's what I'm going to say to him. We'll see how it goes. I'd be so shocked if it was 100 basis points. I would be so shocked. Not going to say it's not possible, but I would be so shocked. We do need a V bottom to go up. Yeah. You know, the thing that I keep trying to say here, I don't I'm having a hard time with this one just because I feel like every time I share this message that like nobody believes me. But I really feel that many people and many market participants are still kind of living in the last crisis, and they're expecting the markets to go haywire and the markets to um, the governments to step in, and then it's a buy the dip, and then we get another 10 years of the market just going up and crazy and stuff. I don't think that that's what's going to happen. I think that today is different, and I think that we put a lot of money into the economy and that we're going to be paying for it for a very long time. And so I think that people underestimate the possibility of like a lost decade sort of a thing. Not like, the markets will be terrible and that it will always be like bear market per se, but just that we'll go sideways for a really long time. And we'll have, we could have a period where we rise, but it's just we rise very, very slowly. And then we could have intermittent periods where we struggle because of risk off moves and stuff. Bad things happening, natural disasters, political instability, etc. Right? That that could happen. Like I was seeing people saying, there's no way that we have a lost decade. We haven't lost enough money for that to happen. I don't think that the probability of a lost decade happening is related to how big of a drawdown from all time highs we've had. What determines whether we have a lost decade is the future growth perspective. And right now, I'm kind of thinking the future growth doesn't look so hot. Like, hey, maybe we have a soft landing and everything, but are they resolving the supply issues? It doesn't look like it to me. Doesn't look like it to me at all. It looks like we're headed for disaster, and we're headed for disaster in the winter, and the governments have basically decided all we can do is pay for it to hope that our constituents won't vote us out. And that's all they've done. We'll see. We'll see. That's what I need to say. I need to stop saying I don't know. I need to say we'll see. We'll see, because that's really what I'm meaning by I don't know. This is like we don't really know what's going to happen. We have to wait and see. Okay, so the market just had a little bit of ticking around there that felt significant. It does look like that it was driven by a large order being placed and then pulled at 31.5. Yes, their large offer was placed at 31.5 that then pulled when we ticked down. So I don't think that was actually news. I think that it just moved. I think that it was just spoofing and stuff. But that kind of suggests to me that there are people out there that are maybe have shorts and stuff, and they're not happy with the way it's moving. So is that one that we really want to get involved in? That when somebody feels like they have to manipulate the market to get the move that they want? No, I don't think so, right? So that just makes me even less likely to want to get involved now. Oh man, what's Sam Woodhull here saying? He's a guy on Twitter that I like to follow for content creation kind of stuff. Oh wow, there's a big long thread here, man. Mm-hmm. Vibe, how's it going? Sorry, I'm reading something here. Let me just read this. Hmm. Yeah, there's been all sorts of stuff going on with Twitch this week, and they've changed their split, and they said that you can't stream gambling stuff anymore. Twitch is looking more and more like a dying platform. By the way, after that spoof at 31.5, we are a little bit higher. I think that somebody, well, when we get a move like that, we really can't know for sure what's going on. But if I'm gonna guess, I think that somebody was spoofing offers because they want it to move down. The market's not cooperating, and now it's moving against them. Maybe people would have to chase it if they get a little bit higher. Okay, here's the S&P 500 opening. So, I have no sense of time whatsoever because I I had no clue that the S&P 500 was about to start there. That's so funny. Oh man. Stoltenberg says NATO needs to be prepared for the long haul in dealing with Putin. So riddle me this. We've spent a lot of money in Ukraine. How long can we continue doing that? At some point it becomes a serious financial issue, doesn't it? Like, you know, remind me of the French during the American Revolutionary War, right? They they spent as much. They basically said we're going to spend as much as it takes to defeat the British, but then it had such a negative impact on their people that even though they accomplished their goal, they were shortly deposed thereafter. Not that I would see it like people being deposed in the United States, but one does have to wonder if a Republican gets put in 2024, if they will be as willing to provide so much financial assistance to Ukraine, especially 2 years out, right? Hmm. On the other hand, I kind of feel like this move by Putin, like this partial mobilization, it really seems to me like Putin has his back against the wall and he's looking for a game changer. A real mobilization would have been just about the only game changer he could have, and even that, it's questionable if that would do anything. But instead, he went for a partial mobilization. How would that help him at all? That kind of feels to me like it's more about sending a message to the West than it is about anything else. I think that his back is against the wall. He wants a deal, and the West is saying, no, we're not going to make a deal. You have to give it all back. You have to be completely humiliated. Well, we'll see how long that goes on for. Bitfinex tweets New York court orders Bitfinex to produce documents. That should be interesting. That should be interesting. The longer it takes is the higher probability he loses the war. The higher the probability that Putin loses the war. Sure, for sure. Well, like here's the thing is like, from my perspective, the West won. I want to say we. I'm trying to be neutral here. I'm very, very angry about what Russia has done. There's absolutely no justification for what Russia has done. It's just the absolute stupidest take, right? Like, it's an independent country. It's been an independent country for a long time now. It's not your country. You have absolutely no legitimate reason to attack them. Okay, this whole nonsense about, oh, there's Nazis over there and all this is total bullshit. Okay. I mean, not only is it bullshit, but it still wouldn't be a legitimate reason to invade. Okay, they pose absolutely no threat to the territorial integrity of Russia. Okay, it's just so dumb. So I want to say we won, but you know, I need to be neutral. Oh, by the way, I need to turn on. You know, I never turned on the music. We should do that. Let's turn on some lo-fi. Anyways, so he tried to take out Kiev, didn't work. Now the Ukrainians have made like a really big headway, and just really are just routing the Russian forces now and everything. So Russia is screwed either way, right? Like they pull out, and now they're still going to have all of the economic consequences and stuff, right? So I think that the West already won, but now the battle is just over what is the real situation going to be afterwards. I think that what the West is doing is they're going for regime change. They basically are trying to humiliate Putin so badly that the Russian people will basically have no choice but to dethrone him. Am I wrong? We'll see. We'll see. We'll see. See, I didn't say I don't know. I said we'll see. We'll see. So I'm not an expert in foreign policy per se. I read a lot of news, but I don't think that I have the necessary professional background to really be an expert in foreign policy, unfortunately. An interesting area, but not the direction that I chose. So we'll see. But, you know, it would really suck to be, 2024 comes and this is still a thing, right? The support for Putin is crumbling from Putin. Well, I think that politically back home, that he's already lost the support of the people. Like, if he did a full mobilization, I don't think that the Russian people would have gone along with it. I really don't. I mean, like, there is this nationalistic support over there. So the whole thing is that the hardliners in Russia basically have this opinion that all of the territory that's ever been a part of Russia or the USSR should be part of Russia. And that it is necessary for their security to take all of those locations. That's basically the approach over there, right? So that reeks to me of extremist political ideology that would easily crumble in the face of reality, right? I don't think those people would be willing to die for that. Do you think that they would be willing to give their lives up for that idea? Because I wouldn't give my life up for that idea. That, oh, there's these people that don't want to be a part of our country need to be forced to be a part of our country for our territorial and security, and yeah, it's just so silly. No, nobody's gonna die for that. Huh? I think that if they did a general mobilization, that too much of the public would say no. Nope. And the thing is legislators are already pushing back. So, like, I feel like the only reason that Putin hasn't been deposed is because he just has such a stranglehold on the country that people think that it's not possible. All right, I had an eye. Oh yes, okay. I was gonna read something. Jigsaw has a new article. Yeah. Yeah. You know what? The beginning of this article is really good. I consistently get 5 to 10 emails per week from people saying, I am lost in my trading. Can you help? These are mostly from prospective customers, but when about 30% are from existing customers. The mistakes they are making and the comments I get are so similar that I thought I'd try to write a blog post to cover most of the issues. In summary, these are, I tried everything, but nothing worked. I just don't see it. I do well for a while and then just blow up. I can't keep control of my mind when trading. I can't stick to my plan. There's a twofold problem here we have to address. Does the person actually know how to day trade? And if so, the mind might come into it, but that's a long way down the road for many. Nah. You know, I made that TikTok. How did that TikTok do? It kind of just did okay on TikTok. I don't know how well it did here on YouTube. Let's go look. Let's go look. That's not bad. 367. 42% percentage viewed. If I come in here, how does that do? So if I go to content, I think it's content, and then shorts. Okay. And then no, that's not it. We'll do these 3 most recent ones. When I look at the engagement, 57% was for this one. Problem with quiet quitting. Wow. Okay, this one was a shorter one, but it was a video of my actual trading. That got 89.5%. And then this one, which actually did do okay. So I need to come back over here. This is just the last 28 days. I need to do like a lifetime. Yeah. It seems to me that when I post a video of actual trading, that gets a lot more interest. That gets a lot more interest. So I think we need to do that more often, huh? No, let's see. I missed a comment from you, Tobias. The younger generation, for sure, they don't want to die for it. They're also accessing information differently. That's why they know what's going on there. Look how important Telegram is in all of this. Oh, it's interesting. You know what, though? I feel that... Okay, so... I kind of touched on it a little bit this morning. I kind of find it funny how when I have a thought the day before that I always somehow find a way to like sneak it into a conversation, even though it maybe doesn't even belong there. But I was thinking about it yesterday, and then a thread about this came up on Reddit. It was like, there's some real problems in our society right now. You know, I was watching this. I was being shown TikToks where Ben Shapiro and Bill Maher having a conversation with each other. And Bill was saying, like, we talk about politics too much. That's like all anybody talks about on Facebook and stuff. And that's what's tearing us apart. And I'm like, you know what? That's kind of how I feel. Was like, I'm an internet geek, and I've always been about knowing everything that's going on online, and specifically about what's going on in politics. And so I think that the way that I react to those sorts of things is different from how regular people react to those sorts of things. And I kind of came out a little bit bitter after the whole Facebook thing, because my basic conclusion was that what I thought was good for me clearly wasn't good for everybody else. Right? Well, no, actually, the reality is that it's not good for anybody. But I have to go through it because I'm able to. I have a different mind than most people, and I'm much more engaged in the subject and knowledgeable about the subject than your average person. I'm not saying that I'm like an expert per se, but I know a lot more than your average person does. And your average person that's only kind of tangentially interested shouldn't be subjected to that stuff, right? So Bill Maher was talking about, like, you didn't talk about politics because it was kind of considered rude, right? I think there was something to that. I think we shouldn't be talking politics on Facebook. I think. I wish that we could, like, not talk about politics on this stream, but it's kind of an important part of what we do. So we kind of have to talk about it because you and I, if you're his, listen, I'm not one of those guys that's like, I need to find all of these people and convince them that day trading is their thing, because day trading is not your thing. It's not anybody's thing. You're right. There's only a few people that, like, we're stupid enough to take it, and hey, somebody has to do it, so it's going to be us. It's going to be us. Somebody has to do it, but it's not for anybody. So I'm only interested in the people that already know that that's the thing that they want, and they're having trouble doing it. Then we're going to show you the way, the things that you're missing, right? That's what we're about. I'm not looking to convince people into day trading, right? So if you're here, it's because you fit in that category. And that also means that you are capable of being able to read a lot about politics and constantly subject yourself to the propaganda and the divisiveness of the politics and not let it affect you. This is why I'm always, when sometimes you guys will get into arguments with me that where I feel like it's like a really ideologically based viewpoint on the economy or whatever. And even if it's kind of like on my side, I'll still argue against it, because our position isn't to be political activists. Our position is to understand what's going on and be able to predict and hedge against those risks, right? Right? I used to be the political activist. I'm not anymore. I'm only interested in the politics in as much, like the activist sort of stuff, in as much as it would help you. So, like, that's why I made a video about the quiet quitting thing. I was like, well, this is an active issue that people will watch, and I think I have something important to say to you guys about it. Excellence is a way of life. You can't be excellent some of the time. You can't say, I'm going to be lazy and not really work very hard, and then someday when I come across the thing that matters to me, then I'll be excellent. No, because you'll have spent your whole life being mediocre. You want to be excellent, you've got to try to be excellent all the time, because it's a way of life. It's super important. It helps assess all sorts of topics, and I see it from a different angle. Yeah. So can you imagine if you were, I don't know if that's anybody here, but there seems to me to be very heavy Russian propaganda efforts on the right these days. When I go to the Donald's, like most of the comments do not seem to care about the Russia thing at all, but there will be a post, just every once in a while there will be a post that is like basically outright praising Putin and stuff, and all of the comments are like, you know, basically siding with Russia and saying, oh, Ukraine is awful and they need to, those Nazis need to be taken out, sort of a thing, right? Because they know that the isolationists that are on the right are going to be more you know, that messaging is going to be more effective on them, right? So if you were one of those people on the right where you feel like that the Russians are right in this situation, can you imagine how much that could maybe hamper your ability to see markets correctly, right? Like one of the things that's going on is that the Russian ruble is stronger now than it was before the war. But the only reason that's the case is because nobody's trading it anymore. It was basically cut off from financial markets, and it's basically not a real market anymore. It's a manipulated, controlled market now because nobody can actually transact with it anymore, right? So if you're coming in, you're making all your decisions based on that the ruble is strong, and the dollar is going to get weaker or something like that. Like, I think that you'd be making a lot of really bad calls. So it's important for us to try and be objective about it. That doesn't mean that we don't have opinions, but like when you do have an opinion, you got to realize it's your opinion. And the issue that I see is, like, again, that's okay for us. It's not okay for everybody else. And when I look at our problems in our society, like, people say that we need, capitalism isn't good enough anymore. We need a new economic system. I really don't see there's a third system, okay? There's either you let people pursue their own interests, or you control everything and try to centralize, have a central government try and decide what is best for everybody as a whole. There's no, I mean, there's level degrees in between that, but like all of your decision making basically goes to one of those two extremes. This whole idea that there's like another economic system, I think is silly, right? The problem is not that capitalism needs to be, we need to move to a new economic system. What needs to happen is we need to be able to put into practice what we actually know. Because the reality is that we know so much more about economics than what we actually do, right? All of this stuff going on in Europe with oil and gas price caps, excellent example, okay? We know very definitively from economics that price caps are a terrible idea. That price caps basically just lead to shortages, and that they are harmful because they do not create any incentive for the producers to produce more of the good. So they're very bad. And yet the politicians still do it. Do they know that? I would like to think that they do. I would like to think that they have economic advisors that say this is a bad idea. They don't do it, right? Our economic knowledge is much further along than our ability to put that economic knowledge to practice. And how do you fix that? Well, I don't know how you fix that without compromising democracy, which is not okay. We still need to have a democracy. People are going to have to be smarter, I guess. Your voters are going to have to be more educated about what's going on. How do you accomplish that? Because has the internet led to the voting populace being more educated on economic issues? Doesn't seem like it to me. So we'll see. I think that there's a solution to this. I'd like to be a part of the solution. Surely there is a different kind of social network out there that's better for this sort of thing. Any thoughts on FOMC today, rates wise? Okay, so I'll go through this again. So, so Brannigan Barrett had a thread out where he was saying that he thinks the market is underpricing the probability of a 100 basis point hike. I disagree with that. I do not believe that the Federal Reserve would hike 100 basis points without putting some sort of messaging out from their chosen outlets that that's the way that they're leaning. But what I do think the markets may not be considering very well right now is the dot plot. So you got to remember that the last few meetings we haven't had the dot plot. We're going to get the dot plot today, and that's probably going to be really paramount to how the Federal Reserve meeting plays out. Okay. So if we come out and there's dot plots where what do they say the terminal rate is, right? So if we get dots where they think that the terminal rate is above 4.5%, then the S&P 500 is probably going to throw a complete fit, right? So that kind of gives the Federal Reserve a little bit of room to wiggle with, a little bit of wiggle room with the markets, because they don't want financial conditions to get easier like they did last time, right? So you can come in, everything that you say can be really dovish and reassuring, but use the dot plot to keep the expectations in line, right? So I think that might be what you see. So I think that the whether it's 75 or 100, I think it's going to be 75, and that's priced in. And you can see that the order flow, like look at the order flow today. Like we said, well, it's going to be to the downside, but it's kind of iffy, right? And then we saw a spoof down there at 31.5, and we said, well, why would you want to be spoofing right now? You're not getting the movement that you want, and so you're trying to, manipulate the market to try and get it to do something for you, right? That's not very confidence inspiring that somebody knows which way this is going to go and all that sort of thing, right? And sure enough, we've risen all the way back up to 0.2 right? So the flow today is still kind of iffy. We haven't really seen a whole lot of strong moves in the treasuries, and very often before a Federal Reserve meeting, we'll see like really strong trends that seem to come out of nowhere, and then that ends up predicting really well what the actual meeting was. So that is not doing anything kind of suggests that there's unlikely to be any surprises, at least with it being a 75 versus 100 basis point hike. But again, the thing that I would study between now and the meeting itself is the dot plot. Okay. I got distracted. What was I doing before all this? I was reading this article. Add to the reputation I seem to have gathered is one of all charts are bad, and people are trying to tell me that they use charts at all. This is not the case, but we'll come back to that shortly. Invalid techniques. There's more than you can shake a stick at, but in the short term, you can make almost any technique work simply by having a huge stop and a tiny target. Or doubling down when a trade goes against you. This seems to be prevalent. Those doing either and then blowing up. The reality is, if you risk 10 to win 1, you'll win 9 out of 10 trades. Okay, the spread will impact this, but close enough, and you will feel like a trading king. You will then blow up your account. I see double downers on sim lasting much longer. After all, sim accounts are infinite, but you'll eventually get to a place where the positive balance turns negative. Now, do professional traders add to losers? Absolutely yes, they do it on every losing trade. But do they do it on every losing trade? Absolutely not. They do it when their premise is proved wrong. Problem with the at-home trader is they don't have a valid premise for their trades, so they double down on everything. You need to know why you are getting in and not playing some sort of Space Invaders game. You'll lose 3 lives doing that. You have to look past the winnings if they are the result of doubling down, holding on forever, or crazy risk reward skews that all guarantee short-term runs but long-term disaster. Yes. You know, I like the way that he's put that, because this is a thing that I've always harped on. But his approach of just saying, you know, you can make almost any technique work by having a huge stop and a tiny target. You know? Not only do you have to trade a valid set of techniques, you have to go through a period of sucking at them first. If a prop trader told you his method tomorrow, you would fail at it because this is a skill. So hurdle number one is finding good intel, which is out there. So you find something, stick with it, and diligently track your progress. Nobody wants to do that. They would prefer to reset their sim account after a bad day and then rather than scrutinize a day. And then he says, so how do you actually trade? Well, here's my 7 effective setups. By the way, how well has that video been doing? 21,000 views. That's really good. That's really good. Interesting. You think a nice drop after the meeting in the S&P 500? I think that just about anything could happen, but I'm not expecting a huge move. Well, actually, no. I like what I'm expecting is you'll get a really big impulsive move that comes back. Like I think that on the day, hold on. This is existing home sales. Existing home sales negative spot 4 versus expected negative 2.29. So the existing home sales are better than expected. That would be, you know, that would probably result in higher rates, but the market doesn't seem to be reacting to it too much. I think that you'll see. So I think that you'll see a day where volatility will outperform, but that it might actually be like a good time to buy condors. You know what I mean? Like there's going to be like this huge move, and then it's going to completely retrace, and we basically end the day at unchanged. That's kind of what I suspect will happen. Unless there's a really big surprise, like they come out and it's 100 basis points, and then this is just going to sell and sell and sell and sell. So anything's possible. We'll see. We'll see. This thumbnail for this video that has done pretty well on Jigsaw. The background has absolutely nothing to do with trading. I wonder what their click-through rate is on that. I kind of want to come in here and compare now. I know I have videos that have more than that, but which videos of mine are that have done more than that? Huh. Okay, so that is on par with my video about what's the best futures trading platform. And the Ninja Script programming one. Yeah. I think that some of these newer ones that started this year could get to that. Well, one about DXV, that's probably going to get to 30,000. What do I think about the event contract? Oh man, I haven't looked at that too much lately. I kind of forgot about that whole thing. There was the one contracts that were like daily options. And I thought that one just sounds like a stupid idea to me. That one just sounds like totally retarded to me. The event contracts ones, let me refresh my memory about this. Or am I talking about the same things? Event contracts will offer the most intuitive, straightforward way to access 10 of the world's most important futures markets. Yeah, these ones. So these are basically like, okay, will the S&P close above 38.75? I think that a lot of this is dumb. Oh, sorry, New Squawk is saying something. Yeah, it's not something that I see myself getting involved in. I'm not going to say that it's like a terrible, that it's a terrible product or something. I mean, clearly if the CME is making it, there's an audience for it and everything. It's just, it's not me. Right. I'm sure that you could hedge yourself with the actual index and make those kinds of plays and make money from doing it though. Better than betting on a horse in a race, but I wouldn't touch it. I mean, it does kind of feel to me like it's constructed. So the question that I have is, what is the driver behind having a contract that works in that function? What is it about that functionality that is so beneficial to a certain set of traders? Because it feels to me that the driver behind doing it that way is because it feels more like a betting market, right? Then that's why I'm kind of like, yeah, not for me. Not for me. If you're going to do a betting market, then let's have a betting market, because InTrade is a man, I've seen sketchy stuff on InTrade. Okay. There's always these little details in the contract that end up mattering more than the question that people are trying to answer. Now you're saying that Crudelli is having a show about that? What does that mean? Does that mean that like they'll do a live stream every day as it closes or something? That might do well. I bet you that my stream would do better if I did it in the afternoon. And he's saying the Auction Vista. Auction Vista is an interesting tool, but I think that you get more information from the DOM. It's not a bad tool, but it's just overhyped because it looks cool. It does look cool. Actually, I haven't even been showing my. You usually have this one over here because I can see the cumulative delta, and I think that the cumulative delta on this looks really good. But I've just been watching it over here on my 5-minute chart. Kind of doesn't show up correctly if I don't have it open. Need to make sure that I keep it there in front. Let's go look. I mean, he works really closely with the CME, and he has contacts there and stuff. So I'm sure that anything that they're doing, that he's going to be, you know, involved in helping to promote it and stuff. My focus is on treasuries, right? So micro treasury futures are freaking awesome. I think that people have blown them off too quickly. Yeah, well, it's a graphic of the DOM, but the issue is that so like this Vista chart, for instance, okay? What makes this yellow? Like right now it's kind of a darkish green. I don't know if you can see that, but it's one level down from bright yellow, and or this one down here, it's flashing between bright yellow and not, right? So what determines that that's yellow afterwards? What it was at the close, right? So that's the problem. So one thing that you could do is you could say show the maximum in the period, sure, but then you can't see that it's like flickering on and off, right? That's why watching it on the DOM is ultimately better, because on the DOM I can see like, okay, hardly anything on offer, hardly anything on bid, that sort of a thing. You know, where is it actually shifting? What is that difference between those two colors? 100 contracts? Could be that it's the difference is just 100 contracts. So the Vista chart doesn't give you as much context. Now together they're really great, because now I can see everything here on the DOM, and I can look back at the Vista chart to remember things, right? Because I think that's one of the most useful things about charts, is that charts kind of helps you remember where we're at and how we got there, right? They don't predict what's going to happen, but they're pretty good at telling you, you know, what happened and how we got there. So everything you need to know about event contracts. Nah, I see I just see that he had a video about it. Live tomorrow at 12 Eastern time. Yeah, that's what they've been doing, right? Is they've been doing the webinar format of things. I prefer to make a talking head video, but that's just the way that I like to do it. It's a good thing that I'm not the only creator in the futures trading space, right? Because I'm really, really proud of my content, and I have some videos that give you information that other people don't have, and really help you cut through all of the bullshit so that you're actually playing the game. Because the reality is, like, most retail traders that are trading, they really aren't even playing the game. They're just trading a random noise and a random line, and it's just noise. And we get into the actual empirical properties behind markets and show you how to really actually play the game. That doesn't guarantee that you're going to win at the game, but at least you'll actually be playing. And, you know, so that's all really good. But there's really big gaps in my content, aren't there? Really big gaps in that content. You know what, though, is kind of the sad thing about it, is that as I've focused more on that really information dense content, giving you stuff to learn, it doesn't do as well as the videos that I was making before. Well, we will be getting back to making those kinds of videos a bit more. Some of the ones that were before were like, you know, combines, because this is what people were interested in. But so it's a good thing I'm not the only creator in this space, right? Like Anthony Crudelli does a lot of things that people really need, but I have no interest in doing, right? People need to know. There needs to be a content creator out there putting information about it, but I just don't care. Like event contracts, I don't care. I have no interest in interviewing somebody about it. Very big stack at 0.2.5. They're having trouble getting through. Looks like that stack showed up there after they failed to extend at 0.3. Also, the oil's not looking so hot at the moment. Oil's not looking so hot at the moment. What do we got here? Let's see here. Biggest winner today is silver with 1%. Biggest loser, corn and wheat. It's funny how that goes. Like corn and wheat and gold and silver are always like opposites of each other on the scale, right? The biggest losers and biggest winners always seem to be those four. corn and wheat on one side and gold and silver on the other. Just 40% of those aged 18 to 29 view capitalism positively. That's the lowest share in any age group and 33 percentage points lower than the share of those 65 and older. Yeah, it's because they're being fed propaganda in schools, I feel. In the past, there may have been some motivation for the Fed to go against what the market had priced, depending on their individual futures positions. Yeah, you heard me. That really happened over and over. Really. Oh, they did trade 0.3. Oh, they need to get through 0.3. That's what it is. Okay, so there's bid. Pretty good bid, 1,000 contracts. Do they hit 0.3 half though? No. Well, they just need to do that a few more times. I think they'll get it. I think they'll get it. Okay. Put a probability on extremely unlikely. Okay. Let's see here. So let's answer this question here. So they say it's, so right now it's 18%. I think it's more like 5%. Okay, so you know what? I have this sticky note, okay? And I hate it when the sticky note gets these little greasy things on them. Do you see that? Do you see that like grease spot on the sticky note? I didn't have any food in here yesterday. The sticky note was fine when I left. I have a theory. My theory is that there is something in here, maybe like a bug, that lands on it and poops on it. That's my theory. That's my theory, because how did that happen? It goes through multiple pages. I'm gonna get like a thing and like enclose it in it. That never happened to my sticky. Like what? And it happens. It regularly happens over and over again. And I think, oh, okay, I just got to put it in the right spot and all this sort. And then it happens again. Nah, nobody was in here. Nobody was in here. So I'm gonna get like a plastic tote or something, and I'm gonna put it in that plastic tote, and then we'll see that they don't get that. Probably, because it's probably like some bug, probably like some fly comes in, likes to taste it or something. No, it's not wet. It's just like, it's just dark. It's just dark. I mean, it could have been water. I don't know where the water would have come from. I mean, if water had dropped on it and dried, that's probably what it would look like. Yeah. It's making me mad. Hey, Nasdaq Killer, how have you been doing? You've been a little bit more sparse since school started. Have you been working hard? Oh, you're competing and trading with a group of yours. Yeah, that's interesting. Oh, so you know what? Wow. I look away for like 5 minutes and they're all the way back to the other side of the range already. So is it a trading competition? Is it kind of like one of those, like, you know, you build a portfolio sort of things? How are your kids? The Asher keeps taking his clothes off, and I basically spend most of the time putting them back on. And then but the younger one is just in the best. It's the peak of life right now, man. For an Ellis, between 6 months and 9 months, that's peak. That's peak Seth. That was probably the best time of my life. It's the best time of their life right now, I think. Then they start walking. Once you start walking, then you become a terror to the world, right? But for now, I'm enjoying. He's just enough to react. He's a smiley baby. He likes to look at us and laugh, and he talks. Like when he's upset, he doesn't just cry. He yaps and yaps and yaps. Like, what is going on? Where did you guys go? You need to come and pick me up and hold me. I can't believe that. Why do I put up with this kind of crap? You know, like that's what he's doing. He's talking like that. Like he's just making baby noises, but like very angrily. So that's better than Asher. I'm hoping that he'll be. I think that Asher probably got a little bit of the autism. So I think that Asher might have won the genetic lottery in that respect a little bit more. Although maybe it's the other way around. Maybe this ends up being a really big benefit to Asher. Because my parents said that it's not too different from me. Man, this really came down. There wasn't really any key. Didn't really seem like anything to really start that happening. The volume on it isn't crazy either. Though I am seeing a little bit more of a correlation with the 6J going into it. S&P 500 is jumping now here too. This is kind of acting like a market that is reacting to a headline, but that it's not out everywhere. Or it's a headline that like we do already know, and I don't know. The Hill asks, is this it for Putin? Bless them. Yeah. May the cute gods bless them. Take care of him, I do. Those two boys. So here's the oil change. It looks like they're moving up to the upside at the moment. That could be part of treasuries falling here. It does looking like, well, so I'm not seeing iceberging against it. I'm not seeing strong flows against it. It is kind of falling through. It does look a little bit more like a currency related move, although I don't see the currencies really moving. But the way that the liquidity has been lately and everything, we shouldn't be surprised to be seeing any kind of move like that. So I think I can smell what my kids are cooking for breakfast. We have a group of 60. We set rules like funding firm rules. Our fee is $3 in, and winners get all. So can you like actively trade futures with it then? Would your strategy be day trade futures and get crazy wins somehow? I once just rejected a paper which used national IQ data. The authors promptly accused me of political correctness while defending the idea that the entire nation state could have IQs of 70 or below because such IQs still allowed people to have children and do physical labor. I would be really skeptical about research like that. No, just stocks. Gotcha. Okay, so there's 28.53 at 28.5. So they've definitely got the volume behind them. Oh, no stocks, only futures. Oh, I see. So then how do they, for the contest, how do they verify it? Yeah, never trade stocks. I don't know. I was watching Ford yesterday. I was kind of like, maybe I should trade stocks because the order flow was really clearly showing that it was going to move lower, and it did. They just never stopped selling it yesterday. That's the question. Oh, jeez. I mean, if I felt like so here's the thing. I think that how do I put this? I think that especially what we do, like what we do here, it's not like this stream is not like we don't want women around or anything like that. And some of our best viewers have been women, but I'm a guy. I kind of run the stream like it's a place for guys, right? And I think that especially for guys, like having healthy competition is really, really beneficial for men. And I think that generally speaking, when you are going into a venture and you're doing it for competitive reasons, that you tend to perform better. So like if you want to get in shape, do a competitive sport and you'll be more likely to get in shape, right? So from that perspective, you would think that having regular competitions in trading would be a really beneficial thing. But there's two problems. Problem number one is, how do you actually have a legitimate contest? Because depending on how you set the rules up, there's almost always some high risk strategy that will work out the best, that is not accurate to how you really want to trade, right? They send me the password and they log in. They need to trade in a non-resettable demo account and then post every day at the end of the day. So yeah, so for me to do a contest, we would need some sort of a platform that, you know, is integrated with Rhythmic or whatever to help us do it. But then issue number two is that it would need to be a long-term contest. It would need to be like a 5-year contest. Who's going to do that, right? Otherwise, you're just being incentivized to do stuff that is probably not very good in the long run, right? So that's why I don't do it. Like, we kind of have to take the perspective that, you know, we need to rely on empirical evidence for our trading, instead of, because otherwise you just kind of get fooled by people, right? So it's kind of a sucky thing. I really wish that I could, it's a little bit of a conundrum, because I really wish I could find a better way to like motivate us, you know? Like sometimes I'm way more conservative than I should be, right? You can't place more than one contract. See, that's not so here would be my contest. Like if I was gonna do it, like, here would be a true measure of a trader's skill would be, you can only use one contract on micro futures, and it runs over 5 years, and you'd be measured by like combination of net profit and probabilistic Sharpe ratio, right? Something like that. Something like that. It would be, you know, how many people would actually want to participate in that contest? Probably not too many. Probably just me. Maybe the reason I have those parameters is because I think I would do the best in that contest. But we'll see. One of the things that you know, is kind of sitting there in the back of my mind is, I've been doing really well this year. I've been doing really well. I'm really happy with my trading. I really feel like that I've really kind of tuned into it and kind of figured out how to use the predictors of order flow to really, because we talked about this for like a good year, 2 years, and now I finally feel like I'm really putting it into practice effectively, and seeing how to combine that with the order flow and correlated instruments and stuff to really get the most optimal trades, you know. But if we come over here and we look at a daily chart of ZN, and you look at that chart, I mean, come on, who couldn't make money off of that? Like really, right? I found last time that the treasuries were falling, you know, before the pandemic, I found that time period very, very difficult to trade, and I felt like it was a lot easier to make money when the treasuries were moving up. But this now it's like I feel like I know what's going on, and I trade really conservatively, but I still do incredibly well. And it's hard to not see that it could just be a function of the market, right? Could just be a function of the market, right? So we need to keep going, and maybe next year I just do dismal. And I say, nope, I still don't understand the market as well as I thought. But for now, we've been doing well. It's kind of funny. I do well, I get more conservative, which I think is the opposite of what you want to do, right? But it's just I feel like that the opportunities where I really see like it's very clear to me that I should go in one direction and that this is a good spot are few and far between is really what it comes down to. The more on I'm on, the better my brain is functioning. And I hasn't been too great this week. You notice that I'm getting a lot of pauses and and all that. Like, for those of you that were here at the beginning of the stream and when we were really teaching like some hardcore stuff, I hope that was effective, because I didn't feel like the delivery was the best. Right now I'm talking, I haven't said in any of these sentences, and I'm just going. But at the beginning I was kind of like, I don't know. Why? I don't know. You learned a lot. Good. When I get into that sort of stuff, I worry that people will go like, well, I don't know about this guy. Hightail it out of there. He doesn't seem all there. There's something off about him. It's the ADHD. But I don't know what it has been this past week that I haven't been quite as, maybe it's just because of allergies. I don't know. But I haven't been speaking as well. I definitely haven't been speaking as well this week. Depends on your sleep. That definitely does. I wouldn't say that I've been sleeping badly. I do feel like every once in a while I kind of feel it in my head, like headache, like a little bit of pressure or whatever. Then it goes away. And I still feel that that's got to be allergies. That sounds like allergies to me, like congestion from allergies or something. But that's also how I'm going to feel if I really don't get enough sleep. And I think that the reality is that with the kids, that like I'm getting to bed on time and I'm getting decent sleep, but I'm not getting great sleep, Do you breathe? I think so. I am not quite in as much shape as I would like to be. I kind of split the difference a little bit more now. So I used to be that I'd put my body into everything, through everything I could for the weightlifting. And lately, since the pandemic, I've kind of been, saving it a little bit. It's like, well, I'm staying in shape, but I don't want to like have a super huge hit to my nervous system. Like I wouldn't have maxed out my squat yesterday. I would have been like, well, I don't want to max out my squat the day before an FOMC, and then FOMC my peripheral nervous system will be shot. That you don't want that. You won't perform as well. So I've kind of been doing that. But that means that I'm not as strong as I should be. Should be like within the course of 3 weeks, I could probably bring my nervous system back to recruiting the muscle well. I would probably need to build I think my shoulders are a little bit weaker than they should be right now. But then I should be able to get back up to like my previous PRs, probably even beat them, because I think I'm a lot better at technique now. Do you remember? I actually, what am I supposed to remember about last FOMC? I don't remember. I don't think I took any trades last FOMC. I remember that. Man. I do remember there was like, wasn't necessarily what people thought. Howl was barking at people. The last FOMC was the one that, oh, no. You're not talking. Okay, you're not thinking about the FOMC. You're thinking about Jackson Hole, right? Yeah, Jackson Hole was like, oh, man. That one was funny because it was like, we knew it was coming, didn't we? Yeah. Yeah, that one. Yeah, and it was because the last FOMC, he felt like that they were that the market thought it was dovish. He didn't like that. Did you read the story? I don't remember which news outlet put it out, but they basically said that he scrapped his speech, his original speech, like the day before the meeting, and opted for a much more short and to the point speech. And yeah, I find it really, really odd that the market doesn't seem to be able to price what the FOMC really believes very well, right? I constantly see the market, or what I'm seeing in the media is like especially this whole the Fed's gonna pivot thing. Like I'm seeing everybody, there's people on TikTok and all these people. Fed's gonna pivot. No, why? They're not. They're everything that they're saying in their speeches is the exact opposite of a pivot. Everything that they're saying is interest rates are going higher and they might stay there for a long time because we need to defeat inflation. Right? And yet the market was like so convinced. I just didn't, yeah, markets aren't informationally efficient, I guess. Most of these people aren't actually paying attention to what the Fed says. Like, they're not watching the speeches and seeing the comments themselves and stuff, right? They're going off of what somebody else told them. And if that was somebody else, you just get a few key influencers that come in and say, oh, the Fed is pivoting, then that's what everybody chooses to believe, right? Especially if it means buy. because the reality is everybody's always looking for a reason to buy. Well, there's another little, I think they extending the lows again. Although I would say move down still kind of looks suspect. So I'm not seeing enough, what do we say? I don't think that this is backed up by the volume and correlations and timing and everything else to justify a trade off of this, but it's chilling down here. UK's Prime Minister trusts I intend to establish low tax investment zones across the country. Oh, I'm just noticing that the 2-year yields are at 4%. You want to ask me? Well, you better ask me the question, because we only got like 10 minutes left, dude. Oh, it's okay. I don't even want to do it. It's gonna be long. Oh, okay. 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 Oh, what did he send me here? Oh. Well, that's interesting. There's a bit, like when we hit the lows here, there was a big change in the options of some sort. Maybe it will continue to trend here. Like they come down here to these lows. They're not really extending, are they? They're kind of... So I haven't seen like a huge transaction down here that makes me think, oh, we're definitely going to form a liquidity hole. But it's starting to spend enough time here that may be what ends up happening. And I find it's just a little bit weird. You have a really, really tough, strong move to the downside, and then nothing happens off of it. Like, you're a big seller. You just got all the contracts that you wanted off of that, and you're done. You're fine. You're done now. I just... would make more sense that like market maker wants it to go to the other side to try and make as much as they can from market making before the actual Fed meeting, you know? The Economist tweets that the framers of America's Constitution fretted over whom to put trust with power, voters or their elected representatives. Because you know what? I feel like I have problems with both sides these days. I don't think that voters are very well educated. I think that they vote for the person with the most name recognition. But I don't think that elected politicians really do what is in the best interests of their constituents either. There's got to be I kind of feel like that our problems go beyond our political system. You know what I mean? Oh yeah, Radoslav, thank you for coming by. Make sure you watch, you know, the videos. Because I've most of this stuff is covered in the videos. It's just I kind of get to go through it scenario by scenario and make it relevant to the current market, right? Which is what's so great about this stream. The best way to learn is to watch it as it's happening. Market is the best teacher, really. Right? All I'm doing is pointing out how the market actually works from proven research. And then it's up to you to turn it into trading. Which is hard, but that's what we're tasked with if we want to become traders. Is it just me or is ZN slow? I would say it's relatively slow. I mean, normally a move of about, let's see here. How we were at 03, so 6 plus, I mean, normally a move of 10 ticks would be like a really good trade for me in ZN with one contract, right? But it relative to recent action, it is definitely slow. And it's you know, it's moving on very little volume. Like we had a change. The max cumulative delta we had today in the 10-year was 20k, and now we 25k. So 5k to move that far is a little. The liquidity just seems to be shy today. It's out there, it's stacked, but they're pulling it before it trades. Pulling it before it trades. By the way, I need to make sure here that my I'm gonna switch over here. Hopefully this doesn't screw up my stream, but I need to make sure that my laptop is on. Okay, excellent. I'll just set that up. That way I can go straight over to it, because otherwise they changed something at my work so that I can't connect to Teams through my desktop to use like my nice microphone and stuff for conferences. So I have to switch over there, which is really sucks. Okay, so I switch back over. Well, it could be worse. Hey, but it's still, I'm still over here. Yeah. Yeah, it's not bad. Not bad at all. It's just some of my windows moved. Some of my windows did move. Celsius's big plan to save itself. Mine Bitcoin. Celsius mining net losses of 20 million from September to August. General and admin expenses alone are greater than the total revenue. Good luck. Oh, geez. Well, we must be seeing the selling come into the 2-year. Because I'm not really seeing where the volume is coming from. Maybe if I was watching the order flow in the 2-year, I would see it where there's somebody's selling really hard, but Financial Times tweets West shrugs off Putin's nuclear bluff and vows to keep up Ukraine support. I tell you what, this is how this is going to play out, right? Is we're all going to be like, oh, yeah, we've won, everything's great, and then all of a sudden one day we wake up and the story is going to be like, you know, Vladimir Putin nukes Kiev or something like that. I sure hope not. But I got kind of a little uneasy feeling about the whole Ukraine thing lately. It's like we're winning, but it doesn't feel like it, you know? Does anybody really win in a situation like that, though? No, not really. Well, yeah, we'll just see. I'm looking at the market and I'm kind of thinking, oh, it looks like they might want to do something. Maybe they'll move lower. But I can remember many times here before the FOMC where I kind of felt like that before I left, and I really wanted to stick with it and watch it. But then it didn't really actually do anything interesting. You know what I mean? So we'll keep an eye on that. Okay, guys, I am going to get going. Let's change the title. Markets shrug off Putin ahead of Fed Day. Ahead of Fed space. One space. Yep. So, guys, I will be here for the FOMC. So I'll start the stream like 5 minutes before 2 p.m. I have a little link in the video description that's like permanent live stream links. So just like mark that, you'll be able to find the stream faster. And I'll create like the scheduled event immediately after this so that you'll see it. All right. So we'll be here to watch it. I don't expect that I'll take any trades, but you never know. So we'll see. Guys, in the meantime, stay excellent, team.